Wow, bueno, me siento que sigo aprendiendo hoy y espero que ustedes también se sienten así. Realmente me puso a pensar mucho lo que los emprendedores nos han comentado y solo quería destacar lo que dijo Ricardo al final, la importancia de tener un gender lens como inversionistas, ¿no? Y creo que, perdón, no gender lens, un lens de diversidad. Y justo vamos a escuchar del PIS en un rato, solo esto. Cómo están evaluando la diversidad cuando están evaluando invertir en un fondo de venture capital. Entonces, ahora tenemos con nosotros Ed Zimmerman de First Close Partners, Susana Garcia-Robles de Capria Ventures, Anita Fiori del IDB Lab y José Fernandez de StepStone Partners. Y el panel es moderado por Luis Narro de PECAP. Gracias.
Welcome again. Good afternoon, everyone. And we are in the final panel of our diversity dividend event, the benefits of an inclusion-based approach to venture capital in Latin America. And we have an amazing panel, basically with the perspective of the LPs, right? And we've already gone through examples of entrepreneurs who are developing great companies from diverse backgrounds. Also, the GP perspective, the panel that we had before, and now we're going to get into the investor's mind and ask them strictly like, why do you think diversity is a must right now in your investment theses? So before starting, I just want to present our panelists today. Ed Zimmerman, founding partner at First Close Partners. We also have Susana Garcia-Robles, senior partner at Capria and senior advisor at LAVCA. We also have Anita Fiori, lead investment officer at the IDB Lab, and Jose Fernandez, chief operating officer and partner at StepStone Partners. So before we start, I'd like to give you all the chance to introduce yourselves for 30 seconds or 1 minute maximum, so everyone knows who are you representing today. And I'd also include like, why do you think diversity is important for you in a personal level? So whoever wants to start.
Okay, I break the ice. I'm a senior partner at Capria Ventures, which is a global fund focused on emerging markets, LATAM, Africa, MENA, Southeast Asia, and India. And we were born global. That's already geodiversity right there. We were born global with people from different countries, different cultures, different ethnic backgrounds. And I think I like to think of Capria, and the reason why after leaving the IDB Lab, I joined it is that Capria is a place where we walk the talk. You're not going to see a lot of write-ups on gender diversity. We just leave it. We have a woman partner. We have 2 investment directors who are women out of 3. We have 2 senior investment analysts out of 4, and we have plenty of women as business operations manager, marketing department, fellows, advisors. So we like to think that we change the ratio by doing it. And for me, this is a dear topic to my heart. Whoever knows of my professional past since 1999, they also know I've co-founded initiatives for women in STEM and women investors.
Thank you, Susana.
I can
Please,
go
Anita.
next. I'm Anita Fiori. I am a lead investment officer at IDB Lab, and I supervise funds that have to do with climate mitigation, adaptation, and also diversity, right? I think why diversity is so important. I think because it is great business. I think there is a vast bibliography out there saying that the more the funds, the more diverse the funds are, the better are the returns we get from them. I can say that today at IDB Lab, we currently supervise over 52 active funds all over the region, LATAM and the Caribbean. And it's not an exaggeration to say that some of our best funds are managed by women or by a group of diverse GPs, women and men. So for us, it's a matter of doing good business, but at the same time of promoting innovation for inclusion in the region. I feel that diversity is like as in soccer or basketball, that it's like in the region, it's like a ball kicking in the middle of the field and nobody's picking it up. So I think we as institutional LPs should pick it up and do wonderful projects and have great returns. Thank you.
Thank you, Anita. And we all know, well, being from LATAM, the influence that the IDB Lab has in our ecosystem. So it's really great to have you both in our panel. Please, Ed and Jose, if you can introduce yourself, please.
Sure, thanks. So I'm Ed Zimmerman. I'm a partner at Lowenstein Sandler, which is a law firm in the States. We have about 350 lawyers. I'm in our New York office, and I chair the tech group, which I started in the 90s. I'm also a professor of venture capital in the MBA program at Columbia. I've been teaching there for 16 or 17 years and serve on the panel of experts at the Wall Street Journal, where I've written about startups and venture. Separately, I've been angel investing in over 140 companies for about 15 years and invested personally in over 100 venture funds during that time period as well. Last year, a couple of friends and my wife and I started a group to co-invest in underrepresented managers starting or continuing to run, but owning venture funds. And we've been investing along this thesis for years. And in fact, in 2013, I published something on the accelerators page of the Wall Street Journal noting that venture capital in America was too white. It was 87% white. It was 89% male, and 52% had degrees from the same 10 schools. Several of those schools are represented on this panel, unsurprisingly. I published a companion case study at Columbia, which I still teach, and those stats have almost remained completely unchanged. So diversity is not only an imperative from a human rights and civil rights and justice perspective, because diversity has been impeded by systemic racism, but it's a financial imperative because there are unbelievable missed economic opportunities as a result of the myopia that comes from having people who look the same way, go to the same schools, live in the same communities, and eat dinner with the same people who look like them. And that missed financial opportunity is a massive cost, and it also causes tremendous discomfort and exclusion and inequity in the workplace.
Thank you, Ed.
All right, so last one here. So Jose Fernandez, a partner and co-CEO at StepStone Group. StepStone is a global investment firm in the private markets, across all private markets. I focus on the private equity space, and I also lead our investment efforts in Latin America. The diversity angle, I agree with everything that has been said so far. Just on a very personal level, I grew up in Puerto Rico, and finished high school there and then went to the US. Growing up, I had no idea about investments or finance or certainly anything about private equity. So as I got exposed to it, as I began my career as an attorney, and then got exposed to that world and learned about it, and made the switch into the investment side. And I think that's that clearly I started about more than 20 years ago, and as has been mentioned here, there was a distinct lack of diversity, which, while it still exists, it's getting better. But I think, just personally being able to expose people that don't have that exposure to the opportunities in the space, and the ability to make something out of that in terms of a career and generating personal wealth, it's a personal passion of mine.
Thank you, Jose. And well, I think we all agree that this is also a great business. Anita mentioned it, Ed also mentioned it in a way, Jose and Susana also. So I think we can just wrap up with the first message that we want to take away from this panel, right? That of course there's a personal connection. As Jose was mentioning, maybe our background is Latin. Of course, I am born and living in Latin America, so I have a strong desire of more diversity. Yes, but I also think from your perspective and being working on developed markets, that you also see that there is a missed opportunity, as Ed was on having more diverse teams in different levels. So I just want to send an ice-breaking question that was taken actually from our panel about GPs. So our GPs were wondering in the panel how if management fees change in terms of of the percentage when it comes to diversity. And I mean, for example, the typical management fee that we understand is the 2%, right? But then if you have to go and find these entrepreneurs, maybe in not the exact same place that you find the other entrepreneurs, you will have to invest a little bit more in developing some community building activities, maybe some workshops. So I just wanted to pick your brain into what do you think of having a slightly bigger management fee in the range of 2.5 or 3%, because you manage a diversity lens fund. So anyone who wants to take the lead in this question, please go ahead.
Can I say something? It's a very good question. And we have discussed this internally, because we had a situation in the past years where we had a diverse group of founders that asked us for a management fee that was different from the management fee we are used to seeing. And that caused a lot of reflection from our end. I have a view, and I'd love to hear about from others here what they think. But as I said, this is good business. Susana, I'm going to say a little bit from your work, but I remember when Susana started to think about gender. Susana, you can correct me later if I'm wrong, but we started to see if we could have women GPs, right? Because there's no better way to invest in women if you have a GP composed by women as well, women and men. And I've never seen them charging any less or any more for their fees. And their funds are, as I said, as good as any other fund. I'm finding the same issue now with Afro-descendant Brazilians, for example. I don't know if you guys know, but in my country, Brazil, 54% of the population is Afro-descendant. So it is really, it's not a niche. It's a market failure that we're trying to address here. And we recently launched the call for proposals for different types of funds, and there is a pillar focused on the topic here. And gladly, none of the decks that we received asked for a different fee from what I'm used to see. So I don't think that's the way to go. I think there are other tools to make that happen, not the VC fund. Maybe if we were talking about a blended finance fund or a technical cooperation fund or anything that is not a typical VC fund, maybe we could do that. But I think that road that you just described, Lucho, I don't think the GP should tackle this one. I think the ecosystem should. But I stop here.
I'm so glad. I thought I was going to be the contrarian. So thank you, Anita. For me, look, and I know Lucho knows this, for me it's all about, are you building a sustainable venture capital industry? Or, as Anita said, you're beginning to enter into the danger zone of it look as a niche. So I like fund managers in venture capital building ecosystems, but I would favor much more that the fund manager shows to me that she or he are going to be really connected with WeExchange, with WISE, with a lot of initiatives that are going on, if we think of LATAM, to get from there the pipeline than saying, give me more money and I will do it. First of all, because a fund manager first duty is to really focus on investments. So I also think that, interestingly enough, the funds that I have seen asking for that more percentage are very small funds, which go again to the fact that they may not be sustainable funds in the midterm. So I would favor making 1,000 introductions and making sure that the fund manager goes a long way meeting all the ecosystems, because there are a lot of things going on right now and initiatives in LATAM that you can favor than just beginning to be the different one. But of course, I respect all other views.
Thank you, Susana. Maybe Ed, Jose, have something to say about this topic?
Jose, would you like to go first?
Sure, I'll just go quick. I think it's always important to be competitive in the marketplace, and I think when you go with off-market fees, you make it harder to raise capital, and it's hard enough to raise capital with everything going your way. So I agree with Susana. I think it goes to this point of you should try and make things work with market terms. And if maybe the fund is too small, if you can't make it work with a 2% fee, and maybe you think about, should it be a bigger fund, or how do you make it work with market terms? But I also think management fees, and it's really important to keep this in mind, both the investors but also the GPs. I always look at them, and it's an advance on your future gains, right? Because assuming that you make gains, those you have to deduct the management fees from the carried interest. So the more fees you're charging is an advance on those carried interest fees, and that's what you should be in business for, is to make carried interest. And that's why we're in business, is for you to generate a lot of carried interest, because that means more gains for us and investors. So I know it's sometimes hard when you're starting out not to focus on that, but really got to keep the long term in mind and make yourself as competitive as possible.
So I respect all of these answers, and they make a lot of sense to me. My answer is a little different. When you're at scale, I completely agree that your management fees should be customary, whether that's 2 or 2.5. When you are subscale, and this also goes to the name of our partnership, which is First Close Partners, we are often taking a risk by investing in a manager who may never get to a second close. We're investing in a venture fund, for instance, that hopes to close a $30 million fund, but the first closing might be $5 million, and they can't sustain themselves on $5 million. And so math that we have done with managers that we've funded has been, what will the management fees be over the life of the fund? What if we front load those management fees so that you can pay yourselves a living wage, particularly in some areas in the States where it is incredibly expensive to live, so that it can be sustainable. And because we understand that due to systemic racism that persists in the States, it's going to be extra hard for underrepresented managers to close. It takes more time for underrepresented managers to close. So can you have the same overall fund expense ratio, but just move it up front? That's part one. Part two is there's a relationship between the management fee and the GP commit. And we think that the GP commit is another structural impediment that makes it much easier to start a fund if you come from wealth than it would be to start a fund if you don't already have cash, just like a track record of investing as an angel. So we're also very, very flexible on the GP commit, because we don't think that you have to prove yourself by showing that you have a lot of money in the fund itself, especially where the manager is saying, my one investment is my current employment, and I'm spending all day, every day working on this fund.
Thank you, Ed. And just to continue with that conversation and with you, I was looking at one of your funds, Ingressive Capital, and it's a fund that is not like so big in what you would like know about like a venture capital fund, no? And that's an issue that we have, for example, here in Peru and probably other Latin American countries, that there are not enough like investors, to raise 20 million, 30 million first-time fund. So most of our fund managers are targeting, for example, 5 million, 10 million, and then you have a lot of questions around the economics of the fund. How are you going to make this fund sustainable? So I just wanted to ask you about how you, of course, I think this is part of the problem that you looked when launching First Close Partners, but maybe you can tell us how are you evaluating this economical part of the fund size when you investing in also underrepresented managers.
So thank you. We are looking for fund structures to be sustainable. So if you're raising a $500,000 fund and that is your full-time job, I'm not sure that I understand how you're paying the rent and how you're writing big enough checks, right? And that's why we want the first closing to be a sizable enough number that it makes sense. A model fund, and I'll get to Ingressive, but a model fund for us would be, years ago, I invested in a fund in New York started by Aaron Holiday and Nnamdi Okiki. Both of them are Black, and their first fund had a couple of closings, and ultimately they got to $7 million for the first fund. And think about how you live as a partnership in New York with two GPs on a $7 million fund one, right? Fund two was $40 million. And it took them a while to raise fund one. It took them a while to raise fund two. Fund three was $165 million, and Harvard and Princeton and Mellon and others came into that fund because everyone else had de-risked the fund. But now Nnamdi and Aaron have a platform that they built and they own. We see that same pattern with Ingressive, which is Maya Horgan Famodu. She's in Nigeria. And when we invested in Fund One, she was striving to get to a $5 million target. Ultimately, she got to about $10 million, which we believe is one of the largest ever first-time solo GP funds raised by a Black woman anywhere in the world. And that's extraordinary that it's still subscale. But it took her a couple of years to raise that money. Fund Two, which she's raising now, which we're really excited about and have committed to, we were her first commitment for Fund Two. She's targeting a $50 million fund. And she was the lead investor in Paystack, which that was her first investment in Fund One. It's also the largest ever venture-backed exit in tech in Nigeria, which is a great proof of concept 4 years later. So we understand that they're going to have to take some risk and that she's going to have to live off of meager fees, and often they will have a side job. For the last 3 years, I've been on the board of Black Women Talk Tech. We released a survey last year of Black female founders, and almost all of them have side jobs. And that makes sense because the venture capital industry in America isn't investing in those companies. So if they're getting so little of the available venture capital dollars, then of course they're going to have side jobs. So I think we have to understand what some of the structural impediments are, and that they're going to take a different path because they're raising subscale funds. I did like the comments about maybe the fund should be bigger. In fact, maybe it should be bigger, and that can also allow different LPs to come in, because often the fund size that they're targeting is too small for someone like StepStone to be able to come in.
And also, I would say, I like what you said, Ed, but I have to say that we as women many times tend to be viewed as less ambitious than men. So if women, the only thing they raise is $5 million funds, we are confirming that, Although I have to say that in my 21 years at the IDB, our first and foremost activity was to invest in first-time fund managers. So I can't tell you how much it resonated when you said, maybe the first close is the only close these people will have. I experienced that. Out of 90 funds, I can tell you, especially in the very first 10 years, the first close was the only close they saw. But we have to be careful that, if you're a woman and you already have, are viewed as you're too conservative, always not thinking big, and you say, oh, my fund is $3 million, you are being part of that rationale. Women don't think big. But the pain is real, obviously, and we have seen it too. Yeah.
I'd like to pick on Anita also on this topic, on the economics of the fund, because you are right now with the call of proposals. I think the first one ended in February, right? The first batch.
Yeah,
but then you also have others during the year, and you have a program like diversity lens fund managers, and also like emerging ecosystems. And I believe, I don't know, this is my hypothesis, that you've seen a lot of these cases now in the first batch, probably. So maybe tell us from your perspective as IDB, what are you thinking about these topics?
Well, I think we are I think I play with Susana. We are the SGR school of thought inside the IDB. She left, but we didn't. I think she left, but she never left, really. So I think this woman did a great job of building the venture capital market in the region. And now we are in a stage where we have the luxury of looking at market failures that still exist in the region, right? Despite all the progress we have made. And what we are trying to do right now is precisely addressing these failures, like the underdevelopment, so to speak, or not as good as a development in large countries, in what we call CND countries, which is Central America and the Caribbean, and some countries in the Andean region, right? At the same time, we are also trying to work on this diversity lens investing, because we realized that we have no funds led by people of color except for the Caribbean region, correct? So, and as I said, we have 200 million people of color in the region. Again, in my country alone, there are 135 million. And they are the largest chunk of consumers. So I'm sure that most of the clients of the startups we indirectly finance with our funds are Black people. So we started to think, well, so we should try to correct this failure. And the IDB usually go where the market doesn't want to go, right? When Susana started 20 years ago, nobody wanted to go with her. But that's our job as a public development bank. So we are doing that. We saw, so you know, Lucho, 66% of the more than 100 proposals we have gotten come from CND countries. And as I said, we never ever had a deck from a Black person, not Caribbean, from the region. And we got 5 decks, robust decks. So I think it's progress. And I do believe this, what we are saying to everybody is that these funds are not going to solve the market failures. They are just going to show the market that there is a way to do it. And we want to be anchors investors in these funds because of that. But these funds were all like minimum $20 million first close funds with, market rates. Despite the fact they are in CND countries, despite the fact they are led by Afro-descended people. So I trust that, again, I don't think it's a niche in our case. I think it's a real market failure.
Okay, Anita, and maybe just to clarify, like, what are you calling as a person of color? Because maybe like there's a different definition for LATAM, or not definition, but like understanding of what this term means.
So it's a very, and depending on the country, it changes too, right? So in Latin America, so I learned it the hard way, believe me. So we are talking about anyone that is not white, so to speak. So I'm talking about indigenous people, I'm talking about brown people, I'm talking about Black people. In my country, everybody, the Brazilians call themselves negros, and that includes pretos, Blacks, and pardos, brown people. So I think we are talking about ethno and racial diversity. So it's anyone but white and male, so to speak. So that's what we are including in this diversity lens investing.
Thank you, Anita.
Angle.
And next question, I'd like to ask Jose more about like how this diversity and inclusion lens integrates with your overall like strategy at StepStone. On one side, like how this fits into your like investment thesis, but also I would like to ask you, Jose, like which are the criteria or the main characteristics of what you look for in terms of diversity for StepStone.
Yeah, so I mean, the diversity and inclusion, again, there is a recognition at our firm by our clients who also give us direction on this, that there are returns to be made by that can be differentiated and better than the median returns by investing in diverse firms. And by that, similar to what Anita was talking to, it is different by country in terms of what their understanding is. But generally, it's women, that's global, and then racial diversity, that is the one that is more varied by country, because it is different in the US than it is in China, or just to give a stark example. But if focus in the US and Latin America, to some extent very similar, it's about the racial diversity in addition to the gender diversity. And we just think that the teams that are diverse have, first of all, more diverse networks, so they have more access to more people than if they had a more closed network, and they have a better interaction internally when there are diverse viewpoints, and we think that leads to better investment returns, and that's what we're looking for, of course. So for that reason, it is an integral part of any of our investment teams in terms of when they're looking at opportunities, that they evaluate the diversity practices of the GPs that we're looking at. So it's not just what does the makeup of the team look like today, but how did it get to be that way? What policies do you have in place to find people, recruit people, promote people, retain them in your organization? And we get pretty detailed on that. It's not just that you recruit outside of the usual suspect schools, but it's just sort of what organizations are you working with to promote these diversity efforts? What are your employment policies? So for gender diversity, what is your maternity leave policy? And those details we are looking at, and we do take that pretty seriously. So that's a big part, and it is part of our investment committee discussions. I must say this has been a change, right? This not used to be a part of our investment committee discussions every time, as recently as 3 or 4 years ago. And in the last couple years, certainly, it is a part of every single investment decision we're making. Is a discussion about the diversity angle. Similar with ESG, which is all actually, we think, interconnected. But these are discussions that are taking an importance that they didn't have a few years ago. So I think for that reason, it's also becoming a strategic importance for the GPs to construct themselves as a diverse organization, or they're going to have a hard time raising capital if they don't have that.
Yeah, I think that's like the power of the LPs. If you direct like the GPs in a way, they will like accommodate, because you are the ones providing the funds, and then that also goes down to the startup level. But Jose, also like I think, and this is also one of my hypotheses, is that we as a region are like very complicated also in a way, and although we might be like beneficiaries of a more diversity market, I believe that most of the times our fund managers are not thinking that way also, no? Like you have the problem, but you don't see it. No? So maybe like any challenges that you've like seen specifically like about LATAM that are not happening maybe in other regions because of this cultural aspect that we have sometimes?
Yeah, look, I agree with you. It's something actually I think does get less thought in the region. But look, I mean, I think one thing we see as a problem is lack of gender diversity in LATAM managers. It's pretty stark. A lot of the GPs we look at don't have a lot of gender diversity. Certainly not at the senior level. So that's one. And then but just even if you go on the racial diversity, I think as Anita was mentioning, right, Latin America is a very racially diverse place, and when you look at a lot of GPs, that you don't find that, right? So, but I think you're right. A lot of people don't think of that as something they need to address. Again, I think that maybe Latin America is a little behind the U.S., but not much. The U.S., like I said, a few years ago, it was not a strategic priority. I think that's what's coming to Latin America. I think investors and GPs should be aware of that and take that into account as they think about how to organize themselves and how to grow their business. That's going to be of strategic importance.
Can I just compliment what Jose just said, that I think is super important? I think we as LPs, as institutional LPs, have a critical role here. I think sometimes the mere question makes GPs think. I like to, oftentimes, as you can imagine, when I get to, not anymore because of the pandemic, but on the screen, to a meeting, an LPEC meeting in my country, in the Brazil, funds usually, so only white men, right? So I usually make a joke. I always say, what do you have against women? I mean, I don't see women here. Do you have anything against me? And now I'm saying, what do you have against Black people? And And I'm asking the GPs, and I see at least in some of our funds, we asked Luis and Jose in our call for proposals, we asked every single one of the GPs how many women you have in your team, how many people of color you have in your team, because sometimes the mere question makes them think about the issue. So I just encourage every institutional LP just to ask. I think that's a beginning.
To that point, one thing, so I chaired a working group on diversity at the LP level in venture and tech in Southern California a couple of years ago. And one of the conclusions that we reached was LPs were not asking GPs to diversify the reference list. And if all you do is say to your GPs, I want to see, when you give me a reference list, that at least a third, at least 2/5, at least half the list is comprised of references who are themselves underrepresented. That's valuable for a couple of reasons. One, it underscores the flaws in their own networks. Two, it diversifies the networks of the LPs. And three, it sends a message to the white dudes that Anita is looking at in that room that we care how you are seen by women, by the LGBTQ community, by Black and brown people, by people with disabilities, and we're going to listen to what they say about us. And I've served as a reference on innumerable LP calls. I've never, ever had a reference call with another LP that's focused on only one manager. You're always talking about an array of managers. And if you do a good job in that reference call, you're going to get another reference call from that same LP later off book. There's real value in it. If that's all you do, that's at least something, but make that part of what you do.
And I would add to that, what we have to understand is these changes will not happen overnight. So I have to say that I'm a very optimistic person, and having been constantly day in and day out for 21 years in Latam, I've seen a lot of progress. We are very far, sure, we are very far, but I can count from the top of my head 50 funds in Latam that in the last 5-10 years have incorporated either women partners or the junior level partners that may become partners in the future. They have felt that this is, and that's why I love the title of the panel, the gender dividend. This was a phrase that Deloitte wrote many years ago, a write-up called the gender dividend, basically saying, what is a dividend? What you earn when you invest well. So investing in women, allowing them to have a seat at the business table will give you more money. It's a business proposition. So I think we also have to make sure that if we are advancing a little bit with the issue male women, now let's go to racial. Let's go. I love, Ed, what you said, because I've been saying it since last year, even more focus on, I don't want, and I'm a graduate of Columbia University, yes, but I tell the fund managers, you can't be just in your own little circle, sitting down with mini-me's, and everybody, becomes like, you say something and you have 5 other people saying yes, because we see the world in the same way. And if you are, for example, approving the investment in a fintech, and the fintech is supposed to give very small loans to underprivileged people, do you have somebody who has had that pain either on the investment committee who will understand if that is a good solution to the problem he or she suffer, or the entrepreneur has somebody like that? Or they are all people who have been privileged to get loans whenever they wanted, but they are trying to save the world, but not including the ones that can tell them, this was my real pain, and this is how I would have loved to have found a solution or a product for my pain. So I think we really have to keep going in this. What is inclusion? Is even broader than gender and race. It's a lot of other things. Can you stand to be sitting at the table with people who do not not only look like you, but do not think like you. And in that disagreement, you become much more enriched in your views and in your way of investing.
Thank you, Susana. And I think that, I don't know if you agree, and yeah, and I don't know if you all agree, and especially like Anita and Susana, who have been like working a little bit closer to LATAM here, and of course Jose and Ed. But like, I think we now understand like the importance of having women in the different levels that you mentioned. But we are precisely in that space of like thinking of where else do we go in terms of diversity and inclusion. And I think this conversation, of course, has been really, really helpful to trigger at least like the question, like, who am I partnering with? Which are the funds or the startups that I'm working with? So just to wrap up, I'd like to give you all like 30 seconds again, maybe a little bit more, just to maybe point out an issue or a data point or a final comment that you want to share with our audience today, and as a final message for this panel.
Look, in everything I do, I always said I don't want a women's club to be complaining about the boys' club. I believe in the complementary, and not only, as I said, across genders, but diversity really in a very inclusive definition. But I also have to say that why teams composed by men and women and people who are very diverse in their views are better, because when you throw women in the mix, for example, women are 1.17 times more likely than men to create social ventures rather than only economic ventures. And then they are 1.23 times more likely to pursue environmental ventures than only economic focused venture. And I remark, they are looking for the economics, but they have a more holistic approach. And to that, you add a diverse team, different views, different ways, and then is where you have the real proposition that comes back in research, in a lot of research that funds, and this is a research by the IFC, that funds that have men and women diversity really have had an average 4.5% higher IRR than either only male or only female dominated teams. So I think, you know, those are figures that you have to really think about and make it a business proposition, because including people and making them be economically empowered changes the world, you know.
Thank you, Susana.
I can complement to that. I just recently came across a study from Harvard Business Review. I think the author is called Eileen Lang. And there was any statistics there that says it all. It says that 65% of the GPs they surveyed in the US, 65% said they cared about diversity, but actually only 25% of them really walked the talk. So my message now is for fund managers: walk the talk. I think institutional LPs are more and more concerned about it. Some of us, including, I can say, IDB Invest, for example, they don't invest in funds where there is no diversity anymore, gender diversity anymore. So I think everybody should walk the talk. I think it's about business, it's about representation, it's about a better future for everybody. Thank you.
Thank you, Anita. Jose, Ed?
Sure, I'll just add something very quickly, which is, you know, there's something that all of us can do, no matter where we are, in terms of just helping people out and connecting them with someone. And you never know what change that can make in a career. But I you know, just think about whatever influence you can have, and it might just be making an introduction for someone. That is good enough. Again, can change the trajectory of someone's life if you make the introduction. Someone that gets hired somewhere else where you made that introduction, that kind of thing. but if you have more than that, you can hire someone, hire an intern, and provide them that exposure. Go out and participate in information sessions for people that may not know about what the career paths are, and give them some direction. I think all of that is helpful because we need to diversify the system, and we need to do that by bringing more people in than that may not know what this path is. So there's always something you can do. So just think about what it is, and there's always something you can do, frankly, very quickly and very easily. If you can spend more time, great. Spend more time and do the hard part too. But just think about something you can do and do it.
I love Jose's guidance to extend the ladder, and this has been a really great conversation. I feel obligated because I look the way I do, and people who look like me started the problem, have perpetuated the problem, and have disproportionately benefited from the persistence of the problem. And my children will also benefit from the problem. And therefore, number one, it costs you nothing to admit it. We all know it. We know that people who look like me started the problem and are the cause of the problem. We should fix it. We should not leave the hard work of fixing it to those who have been on the negative end of the problem, to those who have been treated unjustly and inequitably, to those who've been excluded from financial opportunity. We need to do the work. Doing the work also means that we need to make sure that we don't hesitate when we see an issue to say, why is this room devoid of women? How many LGBTQ people are in senior management at your company, and why not? When is it that you're going to start to diversify your workforce, your investment portfolio? When is it that you're going to ask about the sustainability and environmental impact of the things that you're investing in? Don't hesitate. So I think that we have to also make sure that when we're having a conversation about diversity, the people who look like me are in the room, but not leading the conversation. But we have to do the work. And thank you all for doing the work.
Thank you.
Thank you, Ed, Susana, Anita, Jose. It's been a pleasure. I think if we could extend this panel for a couple more hours, we could just like talk and continue talking and maybe having more people jump in the conversation. But of course, time is limited. Thank you for participating in this panel, for picking our brain into so many questions that we will have, as Jose was mentioning, like, let's think of what we can do, like from our spheres, and just do it, and everything will lead to a more diverse venture capital industry in Latin and, of course, in other places in the world. So thank you all for participating. This has been our last panel in this event. I want to thank Megan Stevenson-Krause and Valeria Morales for putting this all together, and hope this is just the first time we do this event and more to come. Thank you very much.
Thank you all. Thank you very much.